Welcome back. So today we're going to talk about different types of mortgage lenders. A lot of times people are like, well, what's better? Is a broker better or a mortgage lender or a bank? Who's better? Now, before we start, full disclosure, I am a mortgage lender licensed in 48 states. So this is my view of what I see in the market. Now, let's start with brokers, because brokers have done an amazing job marketing over the last 4 years. They had this great campaign, which is brokers are better. So you'll see it as a hashtag, brokers are better. You'll see it in posts. Hey, call me because hashtag brokers are better. Are brokers better? It depends, right? That's going to be the thing with any of this. Like, it depends on the individual loan officer. So whether it's a broker, a banker, or a mortgage lender, you, the consumer, the client, the buyer, you're going to be working with a mortgage loan officer. That's what I am. If I was a broker, I'm still a mortgage loan officer, right? I'm a licensed individual doing loans. So my job is to know the guidelines, get you a good deal, etc. Now, the pitch that brokers use a lot is, well, I shop for the best rate for you. Yeah, maybe. I mean, here's the thing. So yes, in theory. Now, what you need to know is that over the last few years, the amount of options that brokers have to shop has restricted dramatically. You guys can Google this and look up this information. You know, as of right now, the bulk of brokered loans are going to either United, Wholesale, or Rocket. Fairway used to be in the mix, but they actually left Wholesale in February of 2024. Back in the day, there were tons of options, you know, like Bank of America, people could broker to them. Like, brokers had like the pick of everything. But over the years, those wholesale channels, that's what it's called, have dried up. And so you basically have two big players dominating the market, which is United Wholesale and Rocket. So, you know, you can easily go online and see this. You know, United Wholesale has agreements with some brokers where they have to send all their business to United Wholesale or they get sued. Yeah, that's the thing. You guys have to look this up. It's wild. So in terms of, do they have more options than other places? I would argue that a broker is always going to have more options than a bank. And that's because the bank has one option. Now, do I think that brokers can do a terrific job? Absolutely. Do I see some brokers where their rates are so good? I'm like, wow, you know, and one of the broker pitches is, well, we don't have all the overhead of these other places. And that's true. They do have less overhead. They don't have compliance, you know, generally, unless they're paying for that. There's less overhead, but United Wholesale and Rocket still have a bunch of overhead. Let's be real, okay? So can they get you great deals? Sure. Is it always going to be the lowest deal? No, it's going to depend on the individual loan officer and how much they're trying to make. Are they always going to do a better job? No, it's going to depend on the individual loan officer and how good they are at their job, period. Okay. Now look, out of all these jobs, it is easier once you get your license to go to being a broker, because a mortgage lender is generally going to want you to have some level of experience, as is a bank. Okay, so if you get your mortgage license and you're like, gosh, banks aren't hiring and these mortgage lenders want me to do at least $5 million a year, a broker is where a lot of people start out. Now, brokers sometimes have amazing access to products that are outside of the box. That is where I feel like brokers really, really shine, is, you know, like bank statement loans. Do we offer them? Yeah. But would I suggest you go to a broker? Yeah, I would suggest that you go to a broker who does a ton of bank statement loans, because they're going to have a couple different options when it comes to bank statement loans. Because here's the thing, besides UWM and Rocket, there's a bunch of little other investors that brokers work with that do more out of the box. The UWM and the Rocket come into play when we're talking about like a Fannie Mae, Freddie Mac, or Ginnie Mae loan. So conventional VA, FHA, okay? So look, can brokers do some terrific stuff? Absolutely. But it's going to depend on the loan officer that you're working with once again. Do brokers have the same amount of options that they had years ago? No. They don't. And a quick Google search will show you that. Okay, let's get into banks. Now, banks are very interesting. So once upon a time, banks were really interested in lending. Over the past few years, we've seen most of the banks step back. Wells Fargo used to have a huge retail, meaning, directly lending to buyers division. They were the biggest in the country. They have stepped back. Bank of America, same thing, stepped back. So what's going on there? Well, banks really, loans are higher risk and they're not making enough money on them for it to really be interesting to them right now, would be how I look at it. And some people go, oh, well, the banks are afraid to lend. Guys, the banks, when they were doing conventional FHA and VA, all those loans get sold to Fannie Mae, Freddie Mac, or Ginnie Mae. They're not holding that money on their books. The money that a bank holds on a book is going to be either, in many cases, a jumbo loan or a portfolio loan. So a portfolio loan is something that they've created. And here's the thing, guess what? If you have a truckload of money, banks are still really wanting to do your jumbo loan. The reason why they want to do that jumbo loan is because they want people with truckloads of money to be their clients. So if I'm thinking about a bank, like when would I personally say to a client, hey, like you might want to check with a bank? 2 reasons. Number one, they have a ton of money and they're doing a jumbo loan, like 2 million plus. Often, if they work with private banking at a bank, if their file's really clean, has to be clean, they can get an amazing deal. And the amazing deal is based on, hey, if you move $500,000 over here, we'll give you a discount to rate. That's what's going on. If they get the buyer's money in the bank, they're paying them like barely anything. They're making money off the money. That's why they're able to offer such crazy low rates sometimes. So in a situation like that, I would say, hey, check with private banking as well. The other thing would be CRA, Community Reinvestment. So what that is basically the government said to banks, hey, you can't just lend to rich people. you gotta spread it out. So they have these special programs where if you meet the parameters, sometimes it's like 5% down, no mortgage insurance, and the rate's crazy low. They're trying to meet the government required amount of loans that hit certain demographics in terms of income and location. So sometimes those can be smoking deals that a normal lender can't touch. So those are the 2 reasons I would suggest a bank. Beyond that, most banks have moved to a call center type vibe. A lot of the bigger banks, especially the ones with those strong retail presences, the loan officers that were really good, they're all gone. There's very few of like the super top dogs still at those banks. There's a few, but not many. So unless you're doing a jumbo loan or a CRA, probably bank wouldn't be my biggest suggestion. Now, I am a mortgage lender and I work at Guaranteed Rate. So there's lots of companies like Guaranteed Rate, Fairway, Cross Country, Caliber, Guild. They're all the similar type thing. Okay. What it is it's a company that just does mortgages. And, in our case, we sell direct to Fannie, Freddie, and Ginnie, but we also have a bunch of investors. So what that means is, for instance, if I'm looking at a rate sheet, I'm looking at guaranteed rates, but then I'm also looking at, New Res or Freedom or PennyMac or whoever else we have a relationship with. Now, as a direct lender and as a mortgage lender, I do everything in-house, very similar to a bank. So the bank, they're gonna have their underwriters, their processors, they're gonna close the loan. Same here, same thing with a mortgage lender. It's my processors, underwriters, we fund and close the loan. My company does. The broker, it's a little bit different because the broker is not the one who's actually funding the loan. It is the company that they're ultimately having do the loan. Let's say it's UWM or Rocket, okay? That's who's gonna be underwriting and funding and closing the loan. The broker's there to facilitate, okay? So look, the mortgage lender, I chose to be a mortgage lender because of this. Being a banker didn't make sense to me. I've been there. I worked at Bank of America. I had a great experience. I learned a lot. I learned so much. But I don't want to go into jumbo loans as my only source of business, and I've never felt like there was a lot of competitiveness in the other categories. So that didn't make sense. Also, limitation on guidelines. As a bank, you only have their guidelines, and what I learned really early on in my career is I need as many different guidelines as possible in order to help my clients. Brokers have options with guidelines, which is great, and they also have, multiple sources, as we discussed, and they have access to loans that other lenders may not, which is great. The reason I personally did not choose to be a broker is twofold. Control. I am a control freak. It's that simple. You know, processing, underwriting, funding, closing. I want to know every single person who's touching the file, and I want to make sure I get from point A to point Z with as much control as possible. I'm very type A, so the mortgage lender model was better for me for that. The other is states. I'm in 48 states. That's a lot of states. And as a broker, it's much harder to do that because of the way licensing works. Bank, it's easy. They're just like, oh, you work at a bank? Here's all your states. Good luck. Have fun, sweetie. You know, broker, it is way more complicated. As a mortgage lender, I have a lot of licenses I have to do. I have a video on that. But, you know, we have a compliance team and people to make sure that everything's handled properly. States have a lot of regulation on how stuff is reported. There's no way I could do the business that I do and manage a business as a broker. And that's the thing, brokers are basically their own self-employed entities. And when you're doing as many states as I am, it could be something that I know I wouldn't be able to do the level or volume of business that I do. So mortgage lenders, you know, the keys with it is we have a lot of access to products and we have a lot of control. Are any of these institutions better than the other? No, it just depends on what you're looking for. And more than anything else, it depends on the individual loan officer. You could be talking to the best bank in America with the best rates, but if the loan officer doesn't know how to structure your loan, you're never going to close on that rate. Mortgage lenders, you know, whether it's Guild, guaranteed rate, cross country, you're going to see different rates based on what loan officer you talk to because all of them let loan officers set up pricing. There also can be pricing differences based on the state. With banks, you're going to see more consistency, but you'll see state differences as well. With brokers, it's going to depend on the individual broker. Everyone's setting up their own model. So my best suggestion to you is this: pick someone you're comfortable with. Talk to them. Pick someone who will answer your questions. You know, go through numbers, read their reviews, make sure they have reviews. Pick an expert, whether they're a banker, a broker, or a mortgage lender, as long as you're picking someone who does a lot of business, is an expert in mortgages, and will answer your questions, and has good reviews, you're gonna be fine. Thanks for watching.